In this video, I want to share with you a method for making money using a LEAPS option that I don't often hear discussed. Now, LEAPS is a long-term equity anticipation security. Basically, it's a long-dated covered call with an expiration date that's 1 year or more out. LEAPS options are a common investment used by traders to make money. I'm going to share with you a real-life example of my own LEAPS option. I'll give you all the details, the strike price, the expiration date, how much I paid for the LEAPS option. Plus, I'm going to share with you how I made a profit of over 45% in less than 1 year. So if you're interested in making a profit of 45% in under a year, be sure to watch this video because you're going to learn how I do it with my LEAPS option strategy. And once you see how simple it is, you'll be able to do the same exact thing for yourself. But before I go any further, let me answer a quick question. Some people ask me, what makes a LEAPS option so different? As alluded to by the name, LEAPS are stock options with 1 year or more until expiration. If you follow my channel or seen any of my videos, you'll immediately recognize that what I typically use for an expiration date when dealing with option contracts is usually weeklies or monthlies. But what makes LEAPS options so unique, and depending on who you talk to, is that the expiration date will typically be 6 months or more away. But for my purposes, whenever I deal with LEAPS options, I'm using an expiration that's 1 year or more away. So other than the longer expiration date, everything else about the option contract stays the same. Another question I always get asked is, what are the benefits of using a LEAPS option? One of the immediate benefits of owning a LEAP is that you control 100 shares of stock without having to pay for those shares. But wait, what does that mean? I don't have to pay for the shares. Let me explain it like this with a quick example using Apple Incorporated. So here we see 100 shares of Apple stock, and the current price is $140. So in order for me to actually own those shares of stock, my cost to purchase would be $140 per share times the 100 shares, which would equal $14,000. Now compare this to a LEAPS option, where I would have the underlying stock being Apple Incorporated, and my expiration date would be a year or more away. So in this case, I've got January 19th of 2024, and I've specified a strike price of $140. Now, in order for me to own this LEAPS option, which would give me control of those same 100 shares of Apple stock, my cost to purchase this LEAPS option would be $29.80 per share, times the 100 shares, giving me a total cost of $2,980. So with ownership of this LEAPS option, I didn't have to pay the full price for 100 shares, remember the $14,000, but instead I only paid $2,980, and now I control 100 shares of Apple stock that I can sell or trade. So with this lower cost LEAPS option, I have the similar abilities just as if I had directly purchased 100 shares of Apple stock. Now that I've briefly discussed LEAPS options, and the huge price savings that are realized for controlling 100 shares of stock versus directly purchasing those same shares, let me now take a moment and describe how I make money with LEAPS options. So here's the strategy I'm using to make money with the LEAPS option that I don't often hear talked about. Now, even though this LEAPS option has a 1 year expiration date, I actually make a profit before that, and in this particular case, I'm going to make a 45% return. And it's based off the philosophy of buying low and selling high. So I'm going to go ahead and buy and hold my LEAPS in order to earn a profit. And basically, I use 3 steps. Step number 1, first I identify the underlying stock that I'm going to be using for my LEAPS option. And I want to find a stock that has huge growth and upside potential. Step number 2, I'm going to purchase the LEAPS option and specify an expiration date that's 1 year or more out. By picking an expiration that is so far into the future, it greatly reduces the theta time decay of the option. Additionally, the long expiration, it provides a significant amount of time for the share price to rise higher, and the intrinsic value of the option will also increase. And as a result of the increased intrinsic value, it now takes me to step number 3. It means that I can turn around and simply sell the LEAPS option for a profit. So as you can see, this technique is exactly the same approach that would be used for purchasing and holding direct ownership of stocks. So it's nothing new here, except that I'm able to take advantage of a stock and its appreciation without having to actually spend the money to own the stock. Here's the actual transaction record from my account history where you can see the LEAPS option that I purchased. So I'm buying a call for stock symbol MVIS, that's Microvision Incorporated. It's got a $1.50 strike price and an expiration date of January 20th of 2023. Now I submitted this order on January 20th of 2022, so you can see that this LEAPS option has exactly a 1 year expiration date. It expires 1 year from the date that I purchase it. Now, it was filled on January 20th, 2022, early that morning at 6:47 a.m. Pacific time. And at that time, it was paying $2.40 per share, which means when this option contract got filled, I received $240 as the premium payment, and that showed up as a credit deposited immediately into my trading account. So at this point, I now own this LEAPS option, and as the LEAPS owner, I can now hold it, or I can exercise this option, or I could sell it. Here's a daily trading chart for stock symbol MVIS, and if we look at the date March 1st of when I purchased this LEAPS option, the stock price was hovering right around $4, $4.20 per share. Now let's take a look and see what the industry analysts think about this particular stock. Well, there's only one analyst, and they give it a hold rating. So, in other words, if you don't own it, don't buy the stock. But if you do already own it, don't sell it. So, in other words, hold on to this stock. And this analyst gave this stock a 1-year price target of $5 per share. So for me, when I purchased this LEAPS option back in the beginning of March, March 1st, and the stock was trading right around $4 and $4.20 per share, it only had another dollar or so of upside potential. And now if I fast forward to the end of March, we can see that the stock is actually trading at $5.05 per share. So at this point, it's already reached the 1-year price target that the one analyst had estimated. Now, the company itself has a market cap of $831 million and an average share trading volume of just under 6 million shares. So I feel there's plenty of liquidity here. Lots of people buying, selling, and trading this stock. And now if we go back to the daily chart and we look at March 29th, the day that I actually sold my LEAPS option, let's take a look at the share price. And you can see that on that day, the share price had reached a high just under $6 per share. So this was easily over the industry analyst estimate. I also didn't think the stock would reach this high of a price so early. And so now I was faced with the decision of whether or not I should maybe exercise the option and actually get assigned the shares, or maybe I should just sell the LEAPS option for a profit. Well, as you can guess, that's exactly what I did. I didn't exercise the LEAPS option. I actually ended up just selling it and collecting a higher price than I had paid for it. So what actually happened and why did I decide to sell? I was concerned that the price of the shares would drop. The price had gone over the analyst estimate, it had gone over my estimate, and it appeared to be in an overbought condition. And so now let's jump forward to March 31st and actually take a look at what happened. So we can see here on this daily chart, March 31st, the stock price closed at $4.67. So sure enough, the price did drop from its high from March 29th when I actually sold my LEAPS option. Here's the actual transaction record from my account history, where I ended up selling the LEAPS option. You can see that I sold the long-dated call for symbol MVIS that had the $1.50 strike price and the expiration date of January 20th of 2023. Now, I submitted this order on September 29th, and it was filled that morning at 7:30 a.m. Pacific time. So roughly the beginning of the open, or within the first hour or so of the opening of the market. Now, at that time, it was paying $3.50 per share. And so when my sell order got filled, I actually received $350 as the premium payment in order to sell to the buyer my LEAPS option. So now let's take a look at what happened. On March 1st, I purchased a LEAPS option and paid $240. And then on March 29th, I ended up selling that same LEAPS option, even though it hadn't reached 1 year yet. But I sold it and received $350. Which means my net profit was $110. And so that means I got a return on my investment of 45.8%. So now the question is, can you do this? Well, of course you can. There's no magic, it's not complicated, and it's super simple as I just demonstrated. And you can get my stock picks for trades just like this one at my Simple Trading Room community. It's where I provide my stock picks and trade alert notifications to all the members so we can make a profit just like this one. So be sure to join me by going over to discord.simpleoptiontrading.com. I'll see you over there.